Assalamu alaikum and hi. Today we will be discussing the International Accounting Standard number 7, the cash flow statement. This lecture will be divided into three parts. The first one will be the theoretical aspects of the standard. In the second video, we will discuss the practical implication of the indirect method. And lastly, in the third video, we will do a practical demonstration of the direct method with which the cash flow statement can be made. So as the name suggests, that statement of cash flows. How the cash flows in the organization, what are the routes, what are operating activities, what are the investing activities, and what comprise of the financing activities. These are some of the questions that will be answered in today's presentation. Briefly, the outline of our presentation will be introduction and determination of cash and cash equivalent, presentation of operating, investing, and financing activities, and some of the examples, and last but not the least, presentation and disclosure. One thing over here is this whole of the standard is just like the presentation in the disclosure. Lately in the other two videos when we will be finishing the cash flow statement with the help of the direct method and indirect method, you will see that the whole of the cash flow statement is part of the disclosure in our financial statements. One of the important aspects or component of the financial statements as well. Now definitions. What does cash means? Cash in hand, cash held in demand deposits. Cash in hand means that the cash in your business, that is in the form of the what you can say the most liquid form. The second one is cash held, that may be in the bank. The demand deposits. There are no specific guidelines for the demand deposits in IAS 7. Includes instruments. Those are repayable on the demand within 24 hours without any penalty. Cash equivalent. Cash equivalents are the short-term, highly liquid investments that are readily convertible to known amounts of cash and which are subject to an insignificant risk of change in the values. For example, as we discussed in the last slides, demand deposits. Okay, so these are readily convertible. You can just go into the bank and ask them to convert that instrument into cash. They will convert, and which are subject to an insignificant risk of changes in the values. The change in value will be very minimal, and the risk is very insignificant. There is no significant risk in that. So we will consider that short-term, highly liquid investment as cash. Because at a matter of times, if you are needing the cash, you will just go into the bank, present that instrument, and that will be readily converted into cash. Cash equivalents are held for the purpose of meeting short-term cash commitments rather than for the investment or other purpose. Now, the purpose of these cash equivalent is you are not just keeping those as an investment, but for the purpose of meeting short-term cash commitments, you have to pay some supplier in, for example, in coming 1 or 2 months or less than 3 months. So you will be using those cash equivalent. So it's not an investment. You're not earning anything on it. The second one is investments normally qualify as a cash equivalent only when they have a short-term maturity of say 3 months or less for the date of acquisition. Means, for example, if today it's March and for the next 3 months the maturity date is less than 3 months, then this investment can also be considered as the short-term investments. Investments normally qualify as a cash equivalents as when they have a short-term maturity of say 3 months. And lastly, when bank overdraft are repayable on demand and for an integral part of an entity's cash management, they are included as a component of cash and cash equivalent. Sometimes you have a facility with your bank that you can overdraft your bank account. You have the facility to overdraw that. Means, for example, even if you have nothing in your balance, then you can overdraw into the minus. The bank provide you this facility on certain charges, certain commission. That can also be considered as the part of the cash management. So as in cash and cash equivalent, cash on hand, demand deposits, and short-term investments less than 3 months. But we will not include shares in those. Now the cash flow statement will be mainly divided into three parts. The operating activities, the principal revenue producing activities, means the day-to-day activities, investing activities, acquisition and disposal of long-term assets and investments because you're investing to earn something, and lastly, financing activities that result in changes in size and composition of contributed equity and the borrowings. That is mainly related to the ownership of the of any organizations, related to the equity and shares, investing, the disposal of long-term assets and investments. The most importantly, operating activity. Now the cash flow, the difference in cash, increase or decrease in cash will be comprised of mainly these activities. When you're a student, this question is really easy, and at the same time, it is very difficult. Why it is easy? Because you know the exact answer, like few of the other questions which comes into your question paper. You know, for example, the balance sheet. If the balance sheet is equal, you know that the answer is correct. Similarly, in this question, you know the exact answer, the increase or decrease from the balance sheet. You know that what is the final figure, but that final figure has to be distributed correctively between operating, investing, and financing activities based on the concepts. Sometimes maybe you will not be able to differentiate between the investing and the financing activities. So to answer these things, we will go through some of the examples of the operating, investing, and financing activities. First of all, examples of operating activities: receipt from the sale of goods and rendering of the services, mainly the revenue; receipt from the royalties, fee, commission, and other revenue; payment to the suppliers for the goods and services; payment to and or on behalf of the employees, salaries and commission or other type of tax expenses that are borne on the employees; payment and refunds of income taxes unless they can be specifically identified as financing or investing activities. Sometimes maybe you have the facility to just identify those or classify those into the financing activities. Now, these are some of the operating activities that will be dealt in the cash flow statement as an operating activity. And mainly these relates to the direct method. In the indirect method, we are dealing with the non-cash things. We have to exclude all those non-cash things from our calculation. Later on, when we will be practically doing the demonstration, you will be able to differentiate between the two methods and what are the things that will be included. It will be really easy for you. Now, examples of the investing activity: payment to acquire receipts from the sale of the long-term assets, including property, plant, and equipment, intangibles, and payments relating to the capitalized development cost. Secondly, now, these are the long-term assets, property, plant, equipment, intangible, and payment relating to the capitalized development cost. Sometimes you are just developing something at your own, and it's take a lot of time. So you are capitalizing the development cost. That will also be treated in the investing activity. Payment to acquire receipts from the sale of equity or debt instruments of other entities. If you are dealing these things of the other entity, that will be in investing activity. And if it's your for your own organization, it will be treated in the financing activity. So airline difference, what is that? Of the other entity, it's an investing activity. But if for your own, it will be considered as the financing activity, including purchase of investments in subsidiaries, associates, and joint ventures. Advances and loans, including repayment made to the other parties. Then the payment receipts for the derivatives, except when the contracts are held for dealing or trading purpose. If the payment and receipts for the derivatives are for the dealing or the trading purpose, it will not be treated in the investing activity. And payments are classified as the financing activity. Examples of the financing activity: receipts from the issue of the shares or the other equity instruments of your own organization. We discussed in the last slide. If it's related to the other organization, that will be treated in the investing activity. Payment to acquire or redeem the entity's share. Sometimes you are just paying the people to redeem your own shares. You need to acquire your own shares, so you have to pay something. So that will be treated in the financing activity. Receipt from the issue of debentures, loans, notes, bonds, mortgages, and other short-term or long-term borrowings. So any receipts from these things will be treated in the financing activity. Repayment of amounts borrowed, Obviously, here you are receiving, and obviously at some time you have to pay. That will be treated in the financing activity. And last, capital element of the finance lease repayments means, for example, if you have any finance lease arrangement of in the organization, the capital element, not the interest thing, the principal amount, that will be treated in the financing activity, and obviously the interest payment that will be dealt in the operating activity, because that is what you can say related to the day-to-day activities. So, in the nutshell, I can just sum up that the cash flow statement shall report operating, investing, and financing activities. So what are the two ways to make this cash flow statement? The first one is the direct method, and second one is the indirect method. As I told earlier, we will be doing the practical demonstration in the form of one practical example with the two methods, and you will be able to get the major difference. I can just tell you theoretically that the direct method, whereby major classes of gross cash receipts and gross cash payments are disclosed, means you are just dealing with the gross cash receipts and payments, and you will be able to reach at the result of the operating activity, because the main difference between these two methods is the operating activity. The else part, the financing and the investing activity, will be the same. So the main difference will be in this. And in the direct method, whereby the profit or loss is adjusted for the effects of the transaction of a non-cash nature and any deferrals or accruals of past or future operating cash receipts or payments, items of income or expenses associated with the investing or financing cash flows. So here we will be only dealing with the non-cash. We will deduct all the non-cash nature things, any deferrals or the accruals, because as the name shows that it is a cash flow statement. And for example, is there any non-cash expense, depreciation? So cash is not involved, and we reach at a result of the net profit before tax is after deducting the depreciation. So we will be adding up the depreciation again. So the depreciation is non-cash in nature. So we will add that depreciation or any sort of the non-cash expense back into that figure, and we will reach to the final result of the operating activity, or any other deferral or accrual. The same thing with that. Items of income or expenses associated with investing or the financing cash flows. As I discussed in the last slide, I will go on that slide again. The capital element of the finance lease repayment. So if you have any finance lease repayments, the capital element came into the financing activity, but the interest part of that finance lease repayment, that will be dealt in the operating activity. So these will be considered in this indirect method. So this was the today's video regarding the theoretical part of the cash flows. So if you have, thank you, subscribe the channel, like and share the videos for the knowledge sharing, and ask the question in the comments. You can ask anything in the comment section. I will try to reply those. And next on, we will be making the video on the direct method. It will be a separate one, and indirect method.